Hey everybody, what's going on? Welcome to day 6 of my Forex trading journey. Hope everyone is having an amazing day so far. I wanted to go ahead and just start at this particular spot right here because we have not really had a great trading opportunity for the start of our day today. Again, I started around 5 a.m. and I did not get a chance to take a trade until this particular moment with our demo account with Silver. Yes. For those that were on day 5, we know that the purpose of this particular demo account is really to just test out Silver, make sure we are using the right strategy, right? We're using the right strategy on Silver, make sure that our strategy can work so that the plan is to ultimately transition this pair over to our list of pairs that we could trade on our real account. Now, as we can see, gold right now, we just don't have an opportunity at this moment. The buy came around over at this particular point right here and has not necessarily slowed down its momentum. Now, of course, this came before the time I trade. So for if we want to go ahead and we want to pay attention to the server time right here, right? Which is very important. That's essentially when we know we are wanting to trade. We want to align with the server hours. So we're going to do a couple of things. One, we're going to put 124.50. That's our equity start out for the day. And again, equity, that's the real number right there. That's the important number. And we also want to go ahead and put down the server time that I'm trading as well, because this will be very important if you want to follow along and you're not necessarily not knowing when you need to trade if you're watching this outside of the United States. Now, I talked about how in the United States, I normally trade from about 7 a.m. to 12 p.m. Eastern. That's 6 to 11 a.m. Central, 5 to 10 a.m. Mountain, and then 4 to 9 Pacific. But for those that are outside the United States, and we don't necessarily have enough time to go over all the different time zones, I can go ahead and tell you that the server hours of 1400 to 1900 is specifically when I am here and when I am trading for you guys. So we can go ahead and we can save that time frame. And right now we are just looking at silver to see what it does. Now, the reason we got this particular opportunity right here to trade is a matter of the fact is we go ahead and we put that horizontal line or a support right over at this area right here. We could see that there was a bit of a support that was developed over the past 5, 10, 15, 20, 25, 30 30 minutes, I should say. We definitely know that we are in uptrend if we just want to go ahead and take a look. If I even want to just stack a trend line right there, right? Stack a trend line, we could definitely see that we are riding indeed a very, very strong uptrend right now. And ultimately, we're just riding that along until the arrow tells me otherwise. So that's where we are in trading right now. So we're going to go ahead and let that play out. And other than that, let's see. So we can go ahead and talk about the purpose of trading on a demo account, exactly why we're doing this again. And the reason being is that all of the emotions, no, again, beautiful, not so beautiful emotions, the up, down emotions, they were really done for me on a real account. I was very stubborn about not trading on a demo account just because I didn't think it would not necessarily help me. And for a while, I just put in real money, and I ultimately got to a point in my life where I didn't have enough funds to trade, and I didn't feel that if I did not have real funds, that it would be worth to practice a skill. And as I've gone ahead and as I've partnered up with my recent company, I've talked about them, 8 Minute Trader with Longevity. I've really been able to understand from one of my mentors, Sal Leto, that it is very important to trade on a demo account so that you can practice or test out strategies that you wouldn't have the know withal or the initial or the thought process of if you're limiting yourself to just trading on a real account. So that's really the purpose of a demo account, is just to trade when you're not able to trade with real funds at the time. That way you can get the experience and the skill that you need to move forward successfully in the right direction in this $6 trillion a day market. Now, the other thing that I want to talk about is that for this particular trade, because we haven't traded silver before, this is the first time first time that we are trading with silver. We have to understand that we will need to be patient and allow this particular trade to play out. We know what gold has looked like so far for us, and those particular trading times have been a little. I don't want to say they've been steady, right? Like we've been able to use silver and it has been able to move forward for us in a relatively paced amount of time. Uh, with silver, and I hope I said gold at that last part. I meant to say gold has been relatively steady for us. With silver, this is our first time we're trading on the pair. It's our first time getting to know the pair, right? We're starting to have a trading relationship with silver. So now we need to, as with any relationship in life, we just need to get to know the instrument a little bit better before we upgrade this demo experience over to the real experience. And as far as time frame, I'm hoping to at least get a week trading on silver. That gives me a good amount of trading data to understand, okay, we traded on this particular pair for a couple of days and we've seen what we were able to do. And so now we know that we have a sample size that we can work with for our strategy. And so we can go ahead and we can move forward. Just taking a look right here again, we're just waiting for, we're right now in a buy trade for silver, buy trade on my demo account. And that is because for gold, excuse me, that is because for gold, we are just waiting for gold to give us a opportunity. And that's another art form to patience. Sometimes we don't necessarily have a trade that's available to us. So within the first 30 minutes of my day, the first hour of my day, sometimes there could be days where we may not even take a trade at all on gold as we move forward throughout our journey together. And we have to understand that. We have to understand that's perfectly okay. Again, the main objective number one on our trading calls together is to make sure that we are preserving our working capital, our equity, and we don't have to necessarily be reckless in our risk. And all we're wanting to do is just make sure that we work on the best setups possible. There will be a setup with gold at some point in the future, whether that's the remainder of the day today or whether that is a later day. Only the markets will tell us. That is something that we cannot control. We can't control the direction the market wants to go. All we can do is look at the market, see where it's been heading, make a educated guess based on those assumptions, take the trade, have our plan in place, and then we move forward, and that's about it. Now, we can definitely see that this trade is being in a little bit of a battleground right now. Now, a couple of things to consider, even though we've got this buy arrow, because we had talked about, hey, there is a support right over in this particular area. What we're also noticing, and this is something that is very important to cover, just so that we know that, we're not just blindly looking at this trade and not seeing anything. I do understand there is a resistance right around this particular area too. So we are in a little bit of consolidation. And if I go ahead and I just put on my pen right here, where's my pen? There's my pen. Now I do understand that there is a resistance up top right here. And I do understand that the support is down here. And so it is in the price is in a battle with those two particular areas. And right now, we are just waiting to see which direction it is wanting to go. Now, the arrow pointing up tells us that we are looking at a more buy trajectory. We can see that the past history is a buy trajectory. Now, will that play into what we have right here? I'm not necessarily sure. That is something that we ourselves need to go ahead and wait for. And we're not going to care which way it goes. We're going to be, as I've talked about, unshaken in this market. And we're just going to go ahead and let the trade play out. And as I've talked before, I'm going to trade my demo account just like I would as a real account, because if I use the same strategies on my demo account that I would use in my real account, then that tells us that, hey, this pair can be placed onto a real account, and we can follow the strategies that we were doing on this demo account and just translate that over into the real account that we have and do this with real money. But right now, we're just doing this on the demo account. We're allowing the trade to play. We want to get, our goal again is 3% on trades like this, and we will go ahead and let it do what it wants to do. So what I also want to go ahead and talk about is determining the pairs that you want to trade during your trading period. Once again, I am trading from the hour specifically of 5 a.m. to 10 a.m. That's my time to trade. That's where I would like to trade. That is a area of opportunity for me where I know what market I'm in. I prefer this particular market, the American dollar waking up at this particular hour with the New York Stock Exchange and all the United States exchanges coming alive. I do understand that not everyone has the same time prerogative as me. And so you might be a particular trader, depending on where you're at in the world, where my hours don't necessarily work with your hours. Now, I've talked about that. And with those traders outside of my hours, this particular call that we're doing together may not be for you if you don't plan on trading this particular time. However, if you're looking for the strategy, and now you're needing to know, okay, your strategy works. And again, I'm not here to pat myself on the head or pat myself on the shoulder and say, hey, Jordan, you got a fire strategy. I'm just taking the mindset of the person watching these videos, right? It's like, Jordan, I like your strategy, but I don't like the hours that you trade. What is next for me? What are my next steps? And to that, I would say you would want to go ahead and find the pairs that would work for you. Now, the reason I say this is because if I left click on view, left click on symbols, again, I'm just kind of going back and forth, seeing if gold gives us an opportunity. I understand that there are so many pairs out in this Forex market, right? We got indices, we've got exchange pairs, we've got Forex pairs, we've got futures pairs, we've got metals pairs, stocks pairs. There are so many crypto pairs. There are so many things, so many pairs that we can go ahead and touch on the MetaTrader 4. There's bound to be a pair that will work for your trading schedule. Now, will you have to do research on this particular part? Absolutely. That's where I go back to, okay, I want everyone to start practicing with the demo account first, so that if there are things that you need to experiment with, I'd rather you experiment on the demo account first, gather your results, then translate that into a live account. So, for example, what my strategy is going to work for mostly American traders, especially if you trade around my hours of 5 a.m. to 12 a.m. Now, if you're more of a person that would trade during the Asian trading session, which is about early night, late night for me, then you might need to look into the Asian stock market. You may need to look into Forex pairs that correspond with the Japanese yen, most likely. And if you work on the London session, this is where you might have to take a look at the European indexes, and you might have to take a look at the Europe, Great Britain pound, Swiss franc Forex pairs for your trading. That might suit you a lot better. So again, as far as, you know, you have to first determine, okay, what is my schedule? Can I commit a certain amount of time to it? Now, you don't have to do 5 hours a day, 5 days a week. That may not be your particular schedule. But I will say that for those that have their own schedule, you want to make sure you write that down, because what's also very important as you're trading is that you can do this on a consistent basis, right? It is better to have a schedule where you know, okay, I can go ahead and I can pick up this amount of time in these amount of days. So I'm going to trade boom, 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 right at this particular point. And again, that is something that you yourself are going to need to determine when you get the opportunity to do so. Okay, so as we can see, we're just kind of moving along with this particular trade right here. Still, nothing has shown up for gold as of yet. So we're essentially in a little bit of a waiting game right now. And then let's talk about a consistent goal outcome of a trade. So you've heard it from me. I know when I plan to enter my trades, right? So we know that, you know, I entered this particular trade because the arrow, you know, pointed up, this candle closed. I took a trade on this particular candle right here, and here we are. Now, we know how to enter. Now, I talked a little bit before on how to exit, right? There's multiple ways that I exit a trade. So let's write that down. Multiple ways that I exit a trade. Give me 1 second. Okay. Just give me 1 second, everybody. Okay, so multiple ways that I exit a trade. So one, I go ahead and I wait for a 3% account gain. Two, I work on a goal of collecting 30 pips. Or three, the arrow disappears and I work my strat and I work on hedging a trade. And there have been multiple examples of when I have hedged a trade. We didn't have one necessarily that we could have looked at yesterday on a day 5. So if you want more information, or if you want to know exactly how I place those trades, day 3 and day 4 are going to be the best days that you want to take a look at in order to see me work on hedging those trades. But again, a consistent goal outcome of each trade for me is to get at a 3% account gain, or at least 30 pips on a particular trade. And so right now we're working with silver. So far has not produced either 1 or 2 of my particular goals. So I would need to go ahead and wait for this particular trade to play out. And again, just kind of looking at silver, gold right here. No opportunities as of yet. So right now we're just kind of letting silver do its thing at this particular moment. All right, everybody, we are back. So as we can see, we're still in that silver trade at the moment. I did miss out on a gold trade, so that is on me. I missed out on the trade. That is absolutely okay, though. You know, there are many, 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 so many opportunities out in this market. It is going to be crazy. So we're not going to worry about the fact that we did miss out on one opportunity today. I am confident there will be multiple opportunities that we could take within a day, within a week, within a month, within a year. So we just go ahead and we move forward. So right now we're kind of working on a silver and seeing that trade go up so far. So again, I want to talk about, I believe I had mentioned it before. So, you know, we talked about consistent goals. And now while my 3%, 30 pips in the trading market, that may be a goal for me. That might be something that I myself want to do. I understand that in the grand scheme of things, that particular strategy may not work with everybody. Maybe there's another longer goal, shorter goal. Maybe you're wanting to maybe not base it off a percentage. Maybe there's something else that you have in mind, or there might be a strategy that you come up where you have different exit strategies or parameters while you're doing this, and that's absolutely perfect. For me, I'm not saying that I am the expert or the end all be all. Just want to close that trade out there because I just got 3% on that silver trade. Yes, it's on a demo account, but understand that because that right there was able to show a win on silver, that is a sign of good things to come for this pair on this demo account moving forward as we test it out, but also as we put it on the real account as well. So super exciting development right there. But as far as getting that consistent goal, right? The idea is that you would want to go ahead and find your goal. If your goal is not 3%, if your goal is not 30 pips, fine. Find out what that goal is and make sure you stick to that plan consistently. With consistent gains becomes your comfortability, it becomes your trading zone. It becomes what you focus on, so that trading is a lot more easier for you. When I first started trading, I didn't necessarily know what that goal was going to be for me. So whether that was, just again, I was using trading signals in the past. And so I was blindly saying, okay, if it hits the take profit, it hits the take profit. If it hits the stop loss, it hits the stop loss. Yet I didn't know how come it was so important for things to go, or how the stop losses worked, how take profit work, were these trading signals that I was taking at the time working, and a few other things. I've tried many particular things on my trading journey so far, and when I say many, that it probably really isn't many, but I've had many experiences. And each of them has only helped me gain more knowledge, gain more insight, gain more clarity as to the type of trader that I want to become. So every experience that I've had, I can only be ever grateful for, right? Now that's the thing. And that's another thing. If we practice a state of gratitude, just being here, just being able to just take to me, this is like my Zen, because I'm not necessarily distracted by anything else. I go ahead and I just focus for these first 5 hours, get my cup of coffee. Might get another cup of coffee. By the way, if you like coffee, I recommend Bustelo coffee, by the way. Bustelo, that's my favorite. Going back to the point though, if you have a consistent goal and if you understand consistently, whoo, look at that spike. Wow. Wow, 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 wow. Woo. Wow, I am so glad I missed that buy. I mean, of course, we would have gone ahead and we would have, made sure we were out of that trade, but wow. Wow. Wow, I am glad I did not pull the trigger. Ooh. Yikes. Yikes, 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 yikes. All right, so I'm assuming there was some news based off of that, what we call drop. If I take a look at, yep, okay, so we got yep, okay, so we did have some red folder events. So that's another thing that we'll talk about, as we look at that, is red folder event news. So it's going to be very important that you know when those take place, because as you can see, very volatile red folder news can ultimately look like that on your account. Now, you're also going to notice that with the volatility in the market, that would incur the spread for a particular pair to increase just a little bit, so we could see that equity dropping a little bit slightly. I wouldn't be too worried about the equity dropping that much, especially if you've been, and especially with the amount of trades that I have in my account. I'm not necessarily worried about that equity dipping a whole lot. Just a little bit of a dip, and very understandable, just because, well, gold cratered for a moment there. So, that's something to also be very considerate of. If we, because of this drop, because I saw this massive drop with both gold and silver, the only thing that I could determine as to what happened there is the fact that, well, silver just took or there was some US red folder news, and we don't want to necessarily be in any margin if we can help it when those particular situations happen. So down the road, as we move forward, it's going to be very important that we check if we have those red folder news, and just understand that we may not necessarily want to be in any trades, especially if we could see prices fall down just like that. So very good that we were able to see this. Very good that we did not take any trades right now. And so now it's just a matter of seeing what is going to happen next for this particular pair, and also for silver as well. So let's also go ahead and talk about trading on multiple pairs, because there's going to be a point where when we trade on, when ultimately, I envision that we're going to do absolutely amazing on silver. And the idea is that with silver, we're going to go ahead and we'll ultimately move this over to our real account. And I'll show everybody exactly how we're going to be able to manage and mitigate both of these particular pairs when it comes to our trading journey as we, go through the weeks to come and months to come and years to come, especially because I know that there are many pairs that we ideally want to go ahead and run and trade on. One thing that we do want to go ahead and keep in mind as well is when we're trading on multiple pairs is the fact that we obviously want to make sure we're managing both pairs carefully, especially if we have trades in both particular instruments. So, we have a trade here in gold, we have a trade here in silver, and it's very much we just want to go ahead and understand that we want to not necessarily neglect one pair over the other, because while we will have an increased number of opportunities, we'll also need to have an increased level of care, an increased level of risk management as we go through these multiple pairs, especially because if we need to do any quick action, that quick action must be taken. So as we trade on multiple pairs, and that will be coming up at some particular point in time, it's going to be very important that we do have that extra caution as we move forward. Now, I've talked about support and resistance before. So again, one thing that I want everyone to pay attention to is the fact that right here, we just broke some major levels of support. And again, support is just a number. It's just a level where price hasn't necessarily broken. So for example, this would be a support right here. This would be a support right here. Oh, give me 1 second, everybody. Come on. Thank you. Oh, there we go. Okay. So there'll be a major level support right here. And because price broke through all that, that's how you know, that both silver and gold, because there's also support levels here too, that's how you'll know that we will not necessarily be looking for any more buy trades moving forward, but instead we would go ahead and we would look for other opportunities. Preferably, we would be looking for a sell opportunity to take place here. The other things that I want to go over is leverage specifically. So I went into creating a demo account yesterday, day 5, that as we went through and created this particular account, you would have noticed that I put in a leverage setting of 500. Now, with leverage, the biggest takeaway that I can give with leverage is this is a number that allows us more flexibility, more usage on our margin. Let me go ahead and write that down. Uh, so leverage is the ability for our margin to be utilized. The higher the leverage, the more of our account can be used as leverage. So, of course, there are there are positives, there are negatives when it comes to having that particular leverage setting. So one of the beautiful things about having leverage in your account is, of course, we talked about it, the more of our account can be used for trading. Now, a takeaway is the fact that you run the risk of over leveraging yourself a lot easier if you trade too much with the higher leverage. And because you run into that situation where you can easily overtrade yourself, again, it's very important to be careful of how we go about these particular trades. And so our leverage for 500 while it's there and while we have it, the idea is that we want to be very careful. And this goes back to our risk management plan. This goes back into how we enter trades, how we exit trades. As long as we're following that, or as long as we are using that particular sense of care, then we'll be able to move forward in the right direction, and we'll be able to ensure that we are trading the way that we want to. So one of the reasons why we're also right, we're looking into trading on silver and seeing how that does in the week, and why we're trading gold and we're having the opportunities, and we're also understanding, or at least my goal of, we're getting out of the market at about either 3% or 30 pips in profit. It all ties into what I like to call compound interest. Right now, we are compounding our account. We are building up our account gains to a point where we would be able to trade a bigger lot size, and that in turn will equal a few more dollars that we make as we build up our account. Now, the beautiful thing, and of course, I didn't say this was Albert Einstein. Compound interest is the eighth wonder of the world. He who understands it earns it, and he who doesn't pays it. So think about it like this: 3% each trade that we're taking. Times that by 33. It's about 99%, right? Now, if we understand that it takes about 33, 34 trades to get to 100%, right? Well, then all we need to do, so that 100 then becomes 200, we have a bigger lot size, we earn a few more dollars. And the reason why we get to increase our lot size is because for every $100 in gold, that increases our lot size to 0.02. So let me write that down. Let's write this down. So right now, our starting account balance, and again, I'm looking at both silver, I'm looking at both gold to make sure we're not missing any opportunities at the trade. And right now, the market, because it's a big sell-off, I imagine that we're not going to have a particular opportunity at the moment. We'll probably have to wait a little bit. But coming back to our starting account balance question, that is at $100, right? Now, if we look for a 3% account gain or 30 pips in profit, which for both of these answers would equal around the realm of $3 per trade. Let's put that right there. If we make 33 trades, 33 to 34 trades that follow the above rule, put an arrow right there. I don't mean to be Captain Obvious, but just want to make sure we're all on the same page here, right? That follow the above rule, that equals about 99 to $102. So then our starting account balance, so then our balance, new balance, we'll call that new balance shoes. No, I'm a Nike guy. That new balance would be $200. Now, why is that important? Well, let's go back to our the golden rule that we use for gold. For every $100, we increase our lot size to 0.01. So now we would increase that lot size. So let's take this arrow, let's put it over here. So the new lot size based off of this new account balance, well, that would become 0.02. So now that's 20 cents a pip. So now that goal for us, that we follow the same 3% account gain rule or 30 pips rule. Well, then those trades, the trade results based on the new lot size, would be $6, right? So now if you double that, again, same thing, 33, 34 trades, it's about 400. Yes, you increase your lot size to 0.04, with that 100% account gain, but we also have to understand this. We're always increasing our lot size by 0.01 for every $100 that we receive. And if we think about it in the grand scheme of things, it's not going to take us 33 to 34 trades to get to $300 if we now have a new balance at 200. No, because now we're looking at $6 per trade. That new number of trades needed to get to the next $100 is less. And then it becomes less after that. And then it becomes less after that. And then it becomes less after that. And we're going to see this. We're going to see this as we move forward throughout the the upcoming days. I know that's a lot to take in. I know that's a lot. And we haven't even gotten to the points where we need to really start understanding this rule. But that's why this is a journey. And that's why we're going to be doing this every single day. Because you're going to because we'll understand together the vision of how come that's so powerful, how the Forex market is so powerful. Whew. It's amazing, but wow, I am very, 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 very fortunate that's I'm not gonna lie. I would have taken that trade and I would have taken a loss if I was ready to take that trade because I saw that error right there and I would have followed my rule and I would have gotten burned. I would have gotten burned. We would have been able to recover. That's not what I'm saying. We would have been able to recover, but it would have been that would have been a little bit of a painful loss. I'm not gonna, not painful in the sense of, we'll be back. We would be back, but it's just like, oh man, right? So we don't have to worry about that though. Thankfully, we missed that. We did not take that trade. So far, today has been ho-hum in the markets for us in terms of gold trading. We just took our first trade on silver, made our 3%, so that's awesome. If we're moving forward in the right direction on silver, that can only mean good things for us to come as we move forward throughout our chapters together. All right, everybody. So I just wanted to go ahead and check in with everyone. Currently, I did not take a trade today on the for our gold live account. As you can see, I missed that opportunity right there with the white arrow. Again, that's okay. Plenty of opportunities that are going to come within the days, weeks, and months, years that we do this together, my friends. So No trouble if we miss that particular opportunity right there. So it definitely looks like we're not going to have an opportunity today to trade, and that's perfectly okay. What we have to remember is it's not necessarily us needing to get into a trade every day. It's not necessarily whether we win or whether we lose. Rather, we want to make sure that we protect our equity. And we were able to accomplish that today by understanding the market just wasn't right for us. And we didn't take a trade on gold today. And I'm completely okay with those results, understanding that the next day will hold the opportunities that I need in order to move forward. And it's not like we didn't necessarily take a trade technically. Yes, the trade, right? The trade that we took was on silver. And we were able to see, yes, it was a demo account, right? But we were able to see a 3% increase in our demo account. We were able to take our first trade with silver today. And so now we have built up an experience to where, as long as we can see a little bit of consistency, of course, not just today, right? But if we can see that throughout the rest of the week into early next week, then absolutely that is going to be an opportunity that we look at alongside gold. So very, very exciting stuff today. I know that, we're all here to look at trades and whatnot, and that's awesome. And we were able to take a trade, but we also have to understand where we are. We don't need to rush this. We don't need to be impulsive again to just about everything. All we really need to do is just make sure we look at the right opportunities, we look at the right trades, and of course, make sure that I get this recorded and streamed for you guys so you could take a look, and we'll be able to move forward in the right direction. So while we wait for the market to close, I do want to go over, because I had talked about some of the things that we have to understand in the Forex market world. That being the game itself, the rules. We've already talked about that. We've talked about the players that are in this market. Now we need to talk about what the agendas are and what specifically the mission is. And it's very simple when we really think about it. Now, all the objectives are going to tie down to the biggest players in the game first. So let's go over first what the government, central banks, and banks, what are they getting out of the pie? Now, we have to understand that the government and the central banks in particular are trying to move their economies in a way where they don't get sidewinded, they don't get hurt, and they don't get devastated. Now, it's every economy that's out there. But if we want to consider the 8 major ones that are helping move this market more so, like the top 8 markets that are moving this whole picture, it's the USD, which is we'll write down the economies we need to look out for. Of course, we got the USA, United States of America. Then we've got Great Britain, British pound. Then we've got the euro, or the European Union. So, of course, that's countries like France, Germany, Spain, all those countries. We don't need to list them all right now. Then we got the Swiss franc, which is Switzerland. Then we've got the Australian dollar, so that's Australia. The New Zealand dollar, which is New Zealand. The Canadian dollar, so Canada. And then we've got the Japanese yen, so Japan. So these are the top 8 economies, right, that are really helping to move the market. And what we have to understand is that all these 8 countries are trying to make sure that the balance of power within the economy is maintained. United States doesn't want to get too big or too small. Great Britain doesn't want to get too big or too small. The European Union doesn't want to get too big or too small. The Switzerland doesn't want to get too big or too small. Australia doesn't want to get too big or too small. New Zealand doesn't want to get too big or too small. Canada doesn't want to get too big or too small. Nor does Japan want to get too big or too small. So all these 8 different economies are working in tandem with each other to make sure that the proper exchange rates are set, that the proper things are moving into place. And so because of that, these prices that are going on right now are really the main objective of these prices is to make sure that everything stays relatively balanced, where things don't go too up or things don't go too down, and the whole thing just comes crashing down or blowing up one way or another. So that's the purpose of these eight governments and these central banks, is to make sure that everything is stabilized in a way where everyone can take advantage of the market. So we have to understand that a lot of these movements right here, by these eight countries are not necessarily to get at somebody or to make sure that someone goes broke or someone becomes rich. No, all they're really doing is that they're trying to maintain the balance of power that the financial market, the the $6.6 trillion a day industry can provide in maintaining its stability. And then, of course, you got the banks. So you've got, your JP Morgans, your Chases, your HSBCs, your Banks of Canada, your Wells Fargos, your Charles Schwabs, your name me another international bank that is out there. And their job is to also, in the same, make sure that not only their own assets are stabilized, but they're also trying to make a little bit of money out of this market too, right? And they've got capital for days, for lack of a better word. They have got the capital that they need in order to really move the markets. And in tandem, they have to understand, okay, if I'm going to make money, and mind you, some of these international firms are in multiple countries. So, if we're trading American dollars to, let's say, one of their counterparts in Great Britain, well, they are wanting to go ahead and push the exchange rate to a point where they're at least making money, if also not losing it. So ultimately, they're going to push price to a point where, let's say that you turn your American dollars into Great British pounds, if you're a bank, and you want to make money off of that particular point, you're going to wait for an opportunity to where the price of the Great British pound compared to the United States dollar, that particular currency is strength, it goes up, because that means that the Great British pound is stronger, the United States dollar is weaker. And so you would want to get into a position, if you're sending money out or if you're pushing price out, to where if you exchange your currency to another currency, you're technically making a return on that. That's the point of where the banks come into play. They're moving this money around so that they can make sure they're maintaining their profits, because it's not just them. It's the fact that they have to also account for the millions upon millions of customers that have deposits in there. And what they're trying to do is trying to make a profit off of those deposits they have in there. That's the reason why banks allow you to deposit your money into your account. They're not. We'd all love to say that banks, do this out of the kindness of their heart. That's not the case. That's not the case. But that's the reason why they do it. And of course, we get into hedge funds. They're looking to make just returns for their investors. So of course, they're going to move in the direction the banks, the central banks, and the government go, so that they can make money. They go in the same direction as these people, so that they can make money for their investors. Institutional traders, they do the same thing. We do the same thing. It goes back to what I had said on day 4. What's the order? We, the retail traders, follow the institutional traders, that follow the hedge funds, that follow the government, central banks, and banks. It's all very cyclical. And that's really the main agenda of Forex trading, for at least the bigger players, is that they're looking to create stability in the market. Then everyone else just follows the stable road that this main player right here, the government, central banks, and banks, they explore. And again, we're not looking at any trades right now, as you can see, where there's not really a whole lot we can do in the grand scheme of things. So we're just going to go ahead and leave it here for now. Let's take a look at our equity. Right now we're at 124.50, and we're still at 124.50. So we did not gain anything. We did not lose anything. That's perfectly okay. We have maintained our equity so that we can fight another day. And it's beautiful. It's a beautiful thing to not trade in the market because you're so prevalent on protecting your capital that you don't see a move that goes at you that says, oh, I can make 3% on that move. It's a very, very, very powerful thing to know and to have. And as we go through this journey some more, we're going to understand that, especially when we start to expand our account a little bit more. Other than that, the only homework that I have for you guys as we wrap up here is, we saw that we took a trade on silver with my demo account. Perfectly fine doing that. Make sure you're taking practice trades this week. Make sure that you're practicing on your demo account. Make sure you know what your strategy is for getting into a trade, whether you're following me or you're following something else. Make sure you know when you're getting out of the trade, whether you're following me or following a different strategy. And make sure that you're practicing this on the demo account so that by the time you get to your real account, you're going to be able to kill it out in these markets. And we'll do it together, my friends. But anyway, this has been day 6 of my Forex trading journey. Thank you guys so much for watching. And as always, happy trading.